All right, it's about that time of day again here, folks. Welcome back. Welcome back. Boy, that time flies when you're having fun. Time to get back to work, though. After all, Thursday evening, March the 5th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help you find the best levels of support and resistance for tomorrow, the best entry setups and exit targets for tomorrow, and most importantly, my job tonight is to keep us out of trouble by avoiding all the common traps waiting for tomorrow. That's Friday's trading session, and I got a great video in store for you guys and gals tonight. Got the charts all prepped up in the background, got some oil, some S&P, and some gold. We got a lot to talk about as we go into Friday's non-farm session. And of course, speaking of Friday, we got a big day tomorrow. Got some major news to kick off tomorrow's trading session. So we'll grab the calendar and make sure you know when to be trading, when to be sitting on hands, right? And we'll put it all together in tonight's video. So charts are ready. The schedule is ready. Glad to have you here with me. I'm ready as always. Before we jump into the video tonight, though, don't forget to subscribe to this YouTube channel. I don't want you to miss every video we publish on this YouTube channel. If you have any questions, drop those questions in the comment section below. And as always, if you tune in every evening on this video, hit that thumbs up button for me. Always appreciate you guys carving out some time with me every evening on this video. So don't forget, subscribe to the channel. In the meantime, though, let's get this party rolling here. I'm going to kick off tonight's video with the economic news calendar. Let's take a look at the schedule for tomorrow, courtesy of the Econo Day calendar. Tomorrow, of course, is Friday. It's March the 6th. Now, normally, well, let's back it up here. What do we know about a Friday, right? This is, of course, a Friday morning, and Friday mornings always tell me what? Early in, early out. Early in, early out. Now, we usually, in our trade room, we usually find setups from about 8 o'clock in the morning till about 11:30 Eastern time, Monday through Thursday. Now, Friday mornings, you're going to want to start watching price action closely as of 10:30, 10:45, and you really got to have a good reason to be trading after 11 o'clock Eastern time on Friday morning. So definitely keep those lunch plans tomorrow. My personal strategy, I stay away from trading on Fridays. Again, I'll start watching price action 10:30, 10:40, right, 11 o'clock. Got to have a really good reason to be trading after 11 o'clock Eastern time on a Friday morning. So the first thing we think about for tomorrow is don't hit that snooze button too much tomorrow morning. We want to get to our desks early, find those setups early, make our paycheck, and get the heck out of there, right? Hopefully the weather's starting to warm up where you guys are, and you can get out of the house a little bit here on a Friday afternoon. One of the nice things about being a trader is that we get half days on Friday, right? So don't force those trades tomorrow afternoon. What else do we know tomorrow? Well, normally I would say the only news to worry about tomorrow is the employment number. That is the biggest scheduled news for tomorrow, right? This is what everyone, and again, this is the majority of the time, the first Friday of the month, the employment number, also known as non-farm payrolls, the majority of the time that will be the big deal on everyone's mind as we go into that first Friday of the month. But obviously we were waiting on the OPEC cut today. They never gave us the OPEC cut today. Oil kept kind of grinding lower. They were saying this morning that remember the Russians, right, have been the ones that haven't agreed to that more aggressive production cut, right, with OPEC for crude oil. They haven't said no yet, apparently. So apparently there still is potential here. We get that production cut. I wouldn't be surprised tomorrow. We wake up early tomorrow and we get a production cut announcement. Last second, right, kind of Hail Mary from OPEC, because as you can see, we'll keep on, right, dragging lower on the oil. So we're definitely watching for the OPEC announcement tomorrow. Again, we keep hearing about it, but nothing has been officially announced yet. So that will be a big deal for tomorrow. That is a known unknown. And obviously, this coronavirus continues to be a black cloud, right? It seems like right now, every day we wake up right now and it's either risk on or risk off. So we're really kind of waiting day by day right now, to see how the market is going to respond to any new additional outbreaks in Asia. And of course, here in the U.S., we keep hearing about the big cities that are starting to see some outbreaks here in the U.S. Personally, I don't think this is going to be as crazy as the news media wants us to think it is. Their job is to scare the but-you-know-what's out of us. So I don't think it's that big, but I do think, though, that the markets right now are very touchy, right? They're very anxious. They're on the edge of their seats. So we definitely know that at any point tomorrow morning, that next big juicy headline out of the White House, right, or the WHO or the CDC could really shake these markets up. So as I said earlier, normally, that first Friday, all I would be talking about is that employment number. It's a big news report at 8:30 Eastern time tomorrow morning. We've got this black cloud, though, hanging over the markets right now, this coronavirus, with oil, obviously, the OPEC production cut, and we're going to be watching closely here as we go into tomorrow's trading session. One thing you want to keep in mind here, if you're a gold trader overnight, usually, now, again, there's some very extreme situations going on right now, but usually gold is pretty difficult in the lead up to these non-farm payroll numbers. So if you're a gold trader, just, be careful here in the overnight, especially if you're in Asia, if you're in London. Obviously, if you're getting good price action, then trade it. But if it's getting choppy, if it's sloppy, there was a big run today on gold, obviously, so don't force it. Gold is that one market that before these big news events, usually, again, we may see some pretty good price action because of the fear of the coronavirus here overnight, but usually gold is on my radar for being a little bit standoffish before that news comes out. And then don't forget, when the news comes out tomorrow morning, we've really got to give it 7, 8, 10 minutes. This is not your typical news event, right? This is not your typical, news report where 5 minutes before, 5 minutes after. You're thinking a half an hour before, right? And at least 10 minutes after that news comes out, because I'll tell you right now, if that number surprises people tomorrow, it will be very violent in the way the market responds to it. So be careful around that news report tomorrow, especially if you are a gold trader. Now, speaking of trading the announcement tomorrow, right, don't forget every morning, 8 o'clock Eastern time, we're going to get together in our trade room. I'll put all the membership information in the description of the YouTube video, or if you're here on the blog right now at Sideways Markets, there's a big blue button for you guys to learn more by simply scrolling down on this page you're on right now. The easiest way to trade this non-farm payroll announcement tomorrow is to be there with me at 8 o'clock Eastern time. We'll prep the charts up. We'll watch the news come out. We'll update after the news comes out, and we'll trade momentum, support and resistance, and entry setups from there. So don't forget, get registered for tomorrow morning's trading session. All the links in the description, right? Or, of course, from the blog right now. Check out that big blue button for me below the video tonight on the trading blog. Let's keep going. Early in, early out for tomorrow. Careful on the gold. We're going to grab some gold here tonight on this video. I got some oil, some S&P, and of course, right, the yellow metal, the gold futures on the right-hand side. I'm going to jump in here first, though, to the black gold, right, the Texas T, the crude oil futures. And of course, here we are again. This looks familiar, doesn't it? This is starting to get ridiculous now. Here we are on oil with they're all a little bit different, but almost a carbon copy of what we've seen the last couple days, right? What do I mean by that? I mean, we have a range, and at the end of the morning, or the end of the evening, right, we see one try, two try. Now, at this point, the market looks really heavy, right? I mean, it's difficult to call this a bull market right now. However, we're right underneath that trading range, and we'll likely see buyers trying to take this thing back up into that range. Now, another option, of course, is this gap down here at 45.26, right? That's the weekend gap. So if you go back in time, right, that is Friday night, right? Last Friday, basically almost 1 week ago, right? That's the closing price on Friday, right? We go up, we go back down. That would be the second week in a row that's what they get done, right? They gap, they rally, they come back to fill that gap. So there's a lot of really important clues on this chart right now. The bears, they want to get that 45.26 gap again, right? It's kind of a price magnet right now. If they can keep it going, they're going to want to get down to that 43.33, right? That's the major low, right, from earlier on in this big move down. So we've got a couple things we know about right now. We know there's a big range that range is usually going to be the most important clue on this chart. And of course, anytime I have a trading range, I want to buy low, I want to sell high, and I want to avoid the middle. What else do we know? We know we got that bear bias down. So for me to want to be a buyer right now, I'm going to have to be very careful with the very specific entry setup. And honestly, it's going to be the same setup that we talked about just 24 hours ago, right? The same idea we talked about in last night's newsletter. What else do we have here right now? You can easily see I've got these lows lined up around these highs. This creates what I think to be quite an obvious hidden channel. Now, that hidden channel, I would say that hidden channel is going to be a great place to first anticipate sellers. But at the same time, if you're thinking about being a buyer on this market, going back into that range like I am right now, right, then that's going to be a great place to kind of trap in some of these sellers. So this is a really important area up here, right? It's why I call it the battle zone. So we know we're bearish. We know we're underneath a range. I want to buy low when I'm under a range. How would I do that, right? How would I buy this market going back up into that trading range here? Well, again, we know where the range is. The range is a magnet ultimately, right? The range is a magnet. So we're trying to go back up into that range. The problem is I'll bet, like I said earlier, I'll bet you're going to have a lot of sellers coming in around the top of that channel, the top of this channel, right? So this little slice of resistance up here, right? This little area right here, this is where the magic's going to happen. Now, what I want is to be a buyer, I want that two-try trap pattern, right? So as we go back into the range, let me zoom in a little bit closer here. As we go back into the range here, or as we go back to the top of the channel here, I'm looking for that two-try trap. Basically, looking for a strong move up, a shallow pullback, a higher high, and a trap below that low. Now, the moving average in this situation is going to be just like that, right? What happens is strong move up. This is where the bears will come in. They'll try to sell that trap high, right? That will probably stop the people out from there. Might not, right? But if it does, right, we go higher. The bears come in. They try to sell the underbelly of the range. They're trying to sell off the top of these channels, right? So now we've got the bears trying once, the bears trying twice. This is the most reliable way to trade a bear market like this, is to really make sure those bears are trying once, trying twice. Now remember, we've got this resistance coming down here, so being able to find shelter, right, to buy away from that resistance is why I want to use that trap. Now, we saw a great example of this, not on Wednesday, right, but on Tuesday night's newsletter, right? Wednesday morning, it's exactly the pattern, right, that we got. So we want to be aware of that. Again, I call this a two-try trap pattern going back up into that trading range. Now, how could we sell this market right now? To sell this thing as it goes higher, it's going to be very similar, but a little bit different. For example, I want to see as the market goes higher here now, again, I'm anticipating that range is going to be a magnet. If I want to be a seller, here's what I'm looking for. I'm looking for the buyers to try once in the pullback, buyers to try twice in the pullback, and once I can get those buyers trying once, trying twice, then I know exactly where their stops are, and now I can look to hunt for those stops. Right now, one of the most common setups we use is a straight buyer failure, right? So we go up, the moving average comes over, the buyers try to buy the pullback to send this thing back into the range, right? And we look for that short selling into their stop loss. Again, right, we're at resistance, right? It's a bear market. We're trying to sell that resistance. The problem is, though, is this range. If it wasn't for the range where we spent most of our time today, right, it wasn't until this afternoon we got this kind of pathetic example of a two-try move lower, right? If it wasn't for that range, though, I would be looking for that straight-up buyer failure. But because of that range, as we go higher here, I've got to give those buyers one swing, two swings, and then once I can get those 1-2 tries, now I know where those stops are. And a lot of times what happens is you'll see these, right, you'll see this moving average come over, right? You'll see buyers here try once, try twice. It'll fail on you. We'll sell into stops after that, what I call a nested failure pattern, and then look for that re-entry, right, on the pullback. These are two setups I'm watching for here to be a seller. Now, you might be wondering right now, what is the difference? These look very similar. Remember, a buy is a two-try trap, a shallow pullback, a higher high, and a trap low. The key here is that higher high, right? It's a higher high and a shallow pullback, right? That's the key to the two-try trap entry, right? The failure, the nested failure, the seller pattern here is a 1, a 2, right? We're seeing lower lows in price on this, right? We're not seeing higher highs like in that two-try trap. And again, this will usually be just about that moving average. We're selling into those stop losses, right, of those buyers. And then, of course, grabbing the pullback on the way down to, right, what I assume to be, right, that gap. Or again, it's not a gap. It's just kind of a magnet from the gap from earlier on this week. So as the market goes higher, those are two scenarios I'm watching very closely here right now. Now, what if we end up back inside the range? What do we do inside the range now? At this point now, momentum is firmly on our side, and the amount of the move below the range will likely produce a pendulum swing back to the other side of the pendulum up there at 93, right? We'll call it 48 even. So if I can get back inside the range now, right, start settling in like we did earlier today, now this range is in full command. And now, honestly, right, I'm going to start looking at these levels back here to start acting as support, right? We'll draw those into support and try to buy that move underneath. Now, anytime I have a bull market or a bull momentum into a range, I start looking for buy setups just below the range. My favorite buy setups when a market's in a range is simply a seller failure pattern. I wait for the buyers to pull back. I wait for the sellers to confuse that breakout with to confuse the pullback with a breakout. I wait for those sellers to commit off the moving average, and we simply buy right into those stop losses. It'll look very similar to something like that, right? Obviously, it will not be inside the range, though, right? You want to get it outside the range. That example to the left there, it's not a great example because of the location, but the actual, the visual of the pattern is exactly what you want to see, right? So as we go lower, bears break it down. They try to sell the pullback. It's not a trend, right? It's a range environment, so we should be headed back up into that trading range. Now, another scenario here would be a full reversal, right? So we don't even care about the range, right? We go up, strong move up. The buyers hold the pullback off the moving average, and we jump. We call that a 1, 2, 3 reversal. I'm going to mark up that high. I'm going to draw off that major low to find that hidden channel and look to buy the low of that hidden channel. Now, the target on this is actually pretty easy because you got your momentum swing, right? Your pendulum swing, as we call it, at 47.93, right? If the buyers really want to get crazy, they can go all the way back up and retest that major top at 48.41. Now, sometimes when the bears get caught and the market reverses, sometimes it doesn't pull back, right? Sometimes we don't get the 1, 2, 3 reversal, and we have a hard time structuring, right, the entry. So if we don't see the 1, 2, 3, the next best thing is if this thing just starts ripping higher on you, right, look for that two-try trap pattern. Now remember, the kind of prerequisite of this is it's got to be very strong. Right, going to be a very, very strong momentum move. You can see a bearish example, by the way, of this pattern over here, right? Where we see that strong move down, that shallow pullback, that lower low, trap high, and that's exactly what bears are trying to sell, right? Again, this is the same pattern, up, shallow pullback, right, trap low. This is the same exact pattern. I'm trying to be a buyer going back into the range. Right? So again, if we get the 1, 2, 3 reversal, right, I can mark up my high, mark up my low, and buy the pullback. That makes it easy to structure the entry. But if it doesn't pull back and just rips higher here, right, it's that two-try trap pattern, right, as we go back up, right, to repeat that pendulum swing. All right, those are some really good setups we're watching here for tomorrow. Now, speaking of tomorrow, again, tomorrow morning, the best thing I can recommend is to come out and do this with me, right? I'll put all the registration information for you down in the description of this YouTube video or that big blue button on the trading blog right now. If you're not with me tomorrow in the trade room, the next best thing is to grab my free trading course. You got to grab the free course because the free course will teach you my 4 favorite entry patterns. You'll learn failures and traps and strength moves. You'll learn all my favorite setups on that free trading class. I'll also give you hundreds of examples of how we apply those setups to our favorite markets. That way, next time we work together on this newsletter and I say two-try trap or I say, seller failure, you'll know exactly what I'm talking about because you will have gone through the educational course to make sure you know it. All right, guys? So again, come join me tomorrow as a client in the trade room or hit that free course linked up in the upper right-hand corner. Now, what if we don't go sideways here? Or what if we don't go higher, right? What if we sit down here? We got what we assume to be. We assume that gap is the objective. What if we don't get, what if we sit down here somewhere, right? Whether it be at the gap, right? Whatever, right? But what if we end up going sideways down here? Now what do? If we're sideways now in a bear market, what's the plan? I'm going to sell high above the range by using a buyer failure pattern. Right? Very simple idea here. When the market goes sideways in a range like this, we wait for the market to pop up. Eventually, the bears will run out of bullets and the market will pop higher. We wait for that buyer failure now, right, off the moving average, and we sell it back down again. Now, can I buy if the market's range bound down here? I can buy, but I want to make sure I use that nested failure, right? Bears try once, bears try twice, and then I can be a buyer going back up from there. Does that make sense? Right? The reason why you want to make sure you're looking for the nested failure pattern, which I use the word nested because it's a failure inside of a failure, right? In other words, we're going against momentum here, so you better give the bears the benefit of the doubt. Let them try once, let them try twice, then you know where their stops are, and just literally put your order, buy right into those stops. Right? Very, very simple that way. A nested failure pattern, and then again, that could easily snap back up and end up right back into the major range there. Right? Don't forget, that could easily happen too. Right? That could easily rip higher here. 1, 2, 3, reversal. Right? Find the channel, buy the low of the channel. Okay? That could also rip higher. Right? Rip higher into a two-try trap before we get back into that range. As you can see, these patterns can be interchanged in a lot of different ways, with that range being, right, the big magnet. So now we know what the plan is if we go sideways. What if we keep running lower here for tomorrow? If we keep running lower, there really isn't a lot of difference in the strategy. If we keep running lower now, I'm going to mark up that low, I'm going to mark up that high, and this is where we start looking to pick off, right, some of these traps, right? I wait for the price to pull back. I wait for those buyers to think we're going to go back into the range. They come in to buy off the moving average, and we're sitting there, right, to sell it right down their throats, right? That is a very reliable setup if this market continues to kind of grind lower here. It's a buyer failure pattern above the moving average, but up at the top of that new hidden channel. Now, another potential, right, scenario here is this market may really get nasty overnight. It may just collapse, right, as it goes. It may ignore that gap and say, we want that 43.33 tomorrow. Think about it. That's only $2.50 away. Right, we're at 46 right now. It's only $2, $2.50 and change here, right, away from that low. That's very attainable if this market can really rev its engines. So one pattern would be a 1, 2, 3 breakdown. Mark up that low, mark up that high, right? Find that new channel, and we're selling off the top of that channel. This is one of those setups where you wouldn't want to sell the first pullback, because you're so low and you're not around resistance. It's just not a reliable setup there. You can try it, but knowing where we are in the chart, it wouldn't be historically a very reliable pattern. It might work tomorrow, but I wouldn't make it a habit of being that aggressive. Not when we've seen these gaps be the big objectives here repeatedly the last 2 weeks now. So we definitely know that's going to be more aggressive. I'll gladly wait for the more reliable setup as we go. Or if we don't get the pullback, right? Sometimes the market just dumps on you. If it just runs, right? Remember we do here. It's all about that shallow pullback, right? That shallow pullback, that lower low. And again, we saw the same thing over here, right? This is the exact same pattern we're talking about right here. Right? Shallow pullback, lower low, trap high, and go from there, right? It's the same exact pattern, right? Shallow pullback, trap high, and go from there. Same exact idea. Strong push down, doesn't pull back for you until, of course, we get that trap. So I think we got ourselves pretty well covered here, right, for tomorrow. I know how to buy it. I know how to sell it. I know if we go up, down, or sideways, now all we need is for, Father Time, right, to give us a few more candlesticks. And, of course, again, be careful overnight, right? It's these non-farm payroll numbers, again, employment number tomorrow, also known as non-farm payrolls, they tend to make things relatively tricky overnight. Maybe I'm wrong this time around because we got that coronavirus stuff going on, but just be careful in the overnight session. And again, make sure you come out and join me tomorrow, and we'll do it together. How about some S&P right now? What do we know about the S&P? We know the S&P is in a very similar scenario, right, as the oil. We know we are overall bearish. There's no doubt about that. But I will mention, though, the last couple times, right, last few days, we've been bearish at the end. We've been bullish at the beginning of the next day, right? Remember this would happen before, right? This is what happened before, right? Bearish into bullish, bearish. Now, obviously, I can't really use that to predict the bullishness, but it does look like if you were to kind of zoom all the way out on this, right? You can kind of see we're kind of right around, right, this little, potential range here right now. So I would be, I would definitely be very concerned about selling down here. I wouldn't try to be a seller down here just because it's unproven, right, if they're going to keep this thing going lower. If the news media was to tell you, they would say it's going to zero, right, or the world's coming to an end. But I wouldn't go cashing that check just yet. So we definitely don't think it's probably not a good spot to be selling down here. Very good chance that we end up tomorrow, at some point at least, back up into that trading range, right? Because you can see it's been a very sticky area over the past few sessions. So very similar to oil in the sense that we know we have a range. We know the range says to buy low and sell high. And, of course, avoid the middle, right? We know that about a range. We also know this momentum is really strong, right? It's very difficult to call that a bull market right now. So if I want to be a buyer, I've got to use, almost identical strategy here right now to the crude oil. They're not always this simple and easy, but this one just happens to be, right, a relatively similar plan here for the S&P. What else do we know here right now? We also know, much like the S&P, there's going to be some hidden channels here. Now, that hidden channel, I'm not sure how effective that channel is going to be. I think this rising support trend line is probably going to be our best friend here for both the buy side and the sell side. I don't think that hidden channel is going to be that important here, at least not as important as it was on oil. Oil is kind of leading those bears right into that hidden channel, and hopefully setting up for a nice long trade for us tomorrow morning. So we know where that kind of sell resistance area is. We know the range up here. That's going to be my magnet, right? I want to be a buyer going back into that range. How do I buy going back in? There's a couple scenarios I'm watching for, right? One would be, now obviously, again, that rising support trend line is huge for us as a buyer because as we go higher, the bears, they're going to get intimidated by that, by that rising support. So as I go higher, strong move up, shallow pullback, right, and trap low. Oh my goodness, I hope it's that easy. I hope it's that easy for tomorrow, right? So we go up, short covering rally, moving average comes over. They have a shallow pullback, a higher high, trap low, right, off that. Again, watch that trend line. Like I said, that trend line could easily be one of our best opportunities here tomorrow. The problem is you can't really just buy it right now. It's not a very reliable time to be buying it right now because for all I know, right, some headline will come out overnight in Asia and this market will collapse and grind lower. So I definitely wouldn't recommend, I definitely won't be just buying it because I think it's going to go higher. I have to wait for more than just what I think, right? I got to wait for a good setup that allows me to get some momentum, structure my entry, risk and reward, right, so on and so forth. Now, another thing to keep in mind would be if we grind up this, right, this trend line. Right? So if we grind up this trend line right now, what you're also thinking is as we grind higher here, right, they'll oftentimes shoot lower. And as they shoot lower, this thing will come over. The bears will try to sell it, right? And I'll be able to buy off that failure as well, right? Makes sense? Okay, that's going to be a valid setup for us to be a buyer as well. This is going to be a scenario, though, if they grind up that top, right? We may also see variations of that where we go up, we pull back, we bounce, and we trap just barely, same pattern, right? We trap just barely underneath that trend line. Again, same pattern here, right? It's a two-try trap pattern. Or we kind of grind our way up, we make that shot lower, moving average comes over, and we get that seller failure, right, to be a buyer, obviously, right, to be a buyer off of that high, going back into that trading range. So a couple setups I'm watching there. Now, how do we sell this thing as it's going higher? Well, like I said, this trend line is really going to be our best friend, because as we go higher now, the bears have a big problem. They're going to try to get underneath that trend line and use it as resistance with what I call a two-legged pullback. Now, this is a really wide channel, right? It's a very wide channel. I would expect you've got resistance here, you've got resistance there, right? And we'll use that trend line as resistance as well. I would anticipate, though, that if we can get up, we're going to be very bullish at that point. And at this point now, I'm going to want to see 1, I'm going to want to see 2, right? And wait for that, same basic idea was talking about crude oil, right? Because that range is a magnet overhead, right? I'm going to make sure those buyers give it 1 try, 2 try, and I'll look at my best job here trying to sell off of this area of resistance. Now, if they run up like this and come back down, way back down in the range, now look for the same pattern, but look for a trap high. So as you can see, there's a lot of different variables in play right now. A lot of it has to do with that rising support trend line, right? So again, if I can just get underneath this trend line, right? If we grind up here, right? Get underneath it once, twice. As long as I'm selling off the top of that range, 1 try, 2 try, I'm good to go. But the challenge is, obviously, if this thing collapses down, right? Now it's 1, trap, because you don't want to be selling too close to that, right? This range. So these are the two kind of variables I'm watching for. I know it's difficult. It's difficult because of this rising support trend line. This is about as difficult as threading the needle is going to get. And don't forget, we'll be doing this together tomorrow, so you don't have to worry about, right, kind of doing this all on your own. We'll do it together tomorrow, and we'll play this thing as it goes. Now, obviously, right, if the market takes off to the upside, right, and goes back into the range here, watch out for, right, getting stuck in the range. If it gets stuck back in the range again, what do? You keep buying into seller failures. So if we end up back in that range, start going sideways again, wait for that pullback, get those breakout pullback traders to get caught on the wrong side, right? And we're buying into those stop losses. Or we may see a 1, 2, 3 reversal, right? What range? No idea where the range is at that point, right? The range is obviously not important. If we get that strong move 1, 2, 3 reversal, now mark up that high, mark up that low. There's your new channel, and we're buying the low, right, of that channel. And remember, at that point now, there's a big old pendulum swing, right, that could easily put us literally right back up to retest, towards those highs, right? If we were to look at here, kind of where that pendulum swing could be, right? That's the move underneath it. This momentum swings. It's not going to put you back to the highs, right? But it'll put you pretty close. And if they can get back to that 31.15 area, they may just be able to finish the job off there to retest that high. So again, that's going to be that 1, 2, 3 reversal off the low, right? And then of course, mark up the high, mark up the low, buying that pullback, right, off the low of that channel. If we don't get the pullback, right, if it just rips going higher here, 1 try, shallow pullback, 2 tries, trap low, for what was it called again? That 2-try trap pattern. It'll look a lot like this one back here. Strong move up, shallow pullback, higher high, trap, and go. Right? Again, it starts off with a very strong run in one direction. That sets the table, as I always say, right, for a shallow pullback, a higher high, and of course a trap low. Again, we call this a 2-try trap pattern. It's a very, very common pattern. I talk all about traps in that free trading course that's linked up in the upper right-hand corner. And again, we'll be trading all these patterns together tomorrow. The membership information to join me every morning as a client at 8 o'clock Eastern time is right in the description of this YouTube video. So now we kind of have a good plan here if this market rallies higher here. Now, what if it sits here for a while? There's a good chance here. They got the big round number retest. They didn't get the gap filled. My gut tells me we're going back into this range again, but my gut is not a reliable trading indicator by any means, right? I'm going to trade what I see tomorrow. And so if we sit inside this range for a while, right? If we sit and we sit and we sit and we sit, first of all, this trend line now goes away. Right? So if we sit and we sit and we sit, that trend line's gone now, right? So get rid of that trend line if we go sideways here. And what's the plan in a range with a bear bias? You sell high and you buy low. How do you sell high? A buyer failure above the high of that range. And again, right, wait for the breakout pullback. It'll look a lot like that pattern right there. Wait for the breakout, wait for the pullback, sell right into their stops, right? Or how do we buy underneath the range, right? How do we buy underneath it? We buy underneath it with the nested failure. It's just a little bit more patient. That's all it is, right? We want the buyers to try once to sell above the high. I want the sellers to try twice underneath the low. Right? And at first, this may seem a little bit confusing, but, again, when you're with me in the trade room, I'll walk you through it. We'll do it together. I'll show you how to count the entries, right? Or count the bounces, right? It's a buyer failure. It's a seller nested failure. Buy low and sell high if we get that trading range. Now, let's look at the bigger picture here. Where do we have these lows right now? There's a lot of information as we go lower. Most important thing here is we get a major support level here right below this gap low, right? That's that kind of low from not yesterday, right? Day before that, right? So Tuesday morning's low. From there, we have that, right, that kind of runaway zone, 29.46, 29.23. So what you really got to be careful with is if we do get a run lower here, right? Reversals, look for a crown reversal, right? Reversal, 1 try, 2 try, trap low. Okay, as we run lower, if you got some guts, right? This will obviously be a pretty aggressive trade. Anything of a reversal, I always go half size position on reversals. I always remind my clients that reversals will usually take longer than you think. And you can see an example back here of one, right? Where they go up, they come down, right? They try once, they try twice, and see how that little trap right there? That's the same pattern I'm talking about, right? So as we go down to a major support level, that's the only place I can look for the reversals, right? I don't look for reversals in the middle of nowhere, right? We've got to be at a major high. We've got to be at a major low. So as we go lower, I can take that crown reversal. Just remember, though, right, it's not going to happen in 2 minutes, right? It'll happen in 20 minutes, maybe even 2 hours. Right? Just wait for the bears trying once, the bears trying twice. Remember, we are so bearish right now. You don't want to get caught selling into that low. You also don't want to be too aggressive being a buyer off of that low because it's so bearish, right? So wait for that crown reversal and we can buy up from there. Or it's a 1, 2, 3 breakdown. Mark the low, mark the high. I'm not going to try to sell off the first pullback. Right, that first pullback's not going to be very reliable because of location. The second pullback, though, once we get that strong move through, that second pullback, I call this a 1, 2, 3 breakout into a hidden channel pullback. That second pullback is quite reliable. That's very important to remember. So that's one setup we're watching for. Or if this thing just takes off to the downside, you got your 2-try trap, right? Strong move down, shallow pullback, lower low. That lower low is what gives it away, right? And then, of course, your trap. And, of course, we're trying to get down to 23.5 and maybe all the way back down to that 53. I'd be surprised if we retest those lows tomorrow without any fresh news about this virus, right? It would take some it would take an escalation of cases in the U.S., right? There'd have to be some big, kind of blowout, headline that would really spook these markets. I don't think a bad jobs number will be enough tomorrow. But you know what, though? That's just my opinion. Just like you, I'm going to come out tomorrow. I'll see how the jobs number comes out. We'll trade what we get. Right, we'll trade what we get. If the market rips higher, we know the pattern's looking for going higher. If it goes sideways, we're prepared for that. If it tumbles lower, we know we can look for the reversals down here, but we definitely don't want to be gambling on reversals. We'll wait for the right patterns. If it keeps going lower, we're ready to go on that as well. Don't forget, all these patterns, we cover them in the free course, and we'll be trading them together tomorrow as a client. Make sure you come out and join us every morning in the trade room. Wrapping up tonight here on the yellow metal over on the gold futures. What do we got going on here on the GC? Well, I'm not the smartest guy in the world, but I'm going to say we're pretty bullish right now. This market has just a hint of bullishness. Very strong bull move. What does a strong bull move always tell me to do? Right? Strong bull move tells me don't fight direction. No, it has not gone too far. I mean, maybe it has, but my job is not to figure out when it's gone too far, right? So none of this, there's some weekly pivot up here. I don't care what resistance levels overhead, right? Not enough for me to want to short this market. If there is resistance overhead, take some profit, right? But we're not getting short, right, in a market like this. I don't care how good your signal is. It doesn't matter, right? This is a very dangerous market to try to call a top on right now, fundamentally and technically. So a big, strong move up, what does it tell me? Strong moves in one direction tell me we usually get a two-legged pullback and a retest the high, okay, most of the time. Now, sometimes the markets get really, really aggressive. We see strong moves up, and we don't get that full two-legged pullback, right? The market keeps going higher, so we want to make sure we're ready for that as well. We also know there wasn't really any deep pullback today, right? You'll notice, besides kind of flirt with the moving average, there really wasn't that, there wasn't that deep pullback, to allow buyers, to get their toes in the water here, right? You would have really had to have been aggressive on this to participate. So no deep pullback tells me I want to have really two zones here, right? One is for kind of what I expect. Two would be, right, the deep pullback, which is certainly anticipated because we never got the deep pullback. And, tomorrow buyers may come out and say, no, I'm not going to touch this up here, right? The buyers may look at this and say, this is way too high for me. Right? And they may wait for that really deep pullback. Or we may get some news tomorrow, right? The news might be good, right? The jobs comes out good and gold snaps lower, right? What's good for the economy in theory, right, is bad for gold, right? So a good news number tomorrow could produce a big pullback there. I want to be ready for that big pullback. What else? We've gone so far today. There's a likelihood tomorrow, without any, new news. Again, remember, there's that black cloud hanging over us right now. Anticipate a possible range, right? And of course, we also know that measured move, one big leg up, two big legs up, right? That measured move has not been accomplished yet. At least not from what I can see. And therefore, it could be very likely this market keeps on grinding higher until it gets up to that measured move. So we definitely want to be ready for that as well. The buyers are hunting for the retest of the yearly highs up there at 1691.9, right? All the way back there, it seems like forever ago, back in late February, right? It was a leap year after all. It was a long month. I'm kidding with you. Okay, so now we know the buyers, where they're trying to go. The bears, they want to go all the way back down to retest that low, right? Back to that range from before. So bears definitely have their work cut out for them. Now, two buy zones, one for a shallow pullback, second one for a deeper pullback. That's really the name of the game here for tomorrow, right? First of all, do I get a two-legged pullback? Strong move down, right? Bounce off the trap low, moving average, right? Comes off like that. That would be a two-legged pullback. Go up and over and use it. We talked about that briefly on the crude oil, right? Or on the S&P, right? Want to use that trend line, get up and over, and then back up to retest those highs. I call that a two-legged pullback, 2LP, right, for short. Or we may not get a two-legged pullback. We may just simply slice lower, right? The buyers in the market take their profit, for example. The bears come in. They think this thing is a bear market. They try to short off the EMA. Those poor bears, right? Their stops are now exposed and the odds are not on their side. I'm buying into stops. I'm buying pullbacks off the EMA. And where's our objective? Back up to retest the high, up to the measured move. This in a strong trend is a very consistent, a very common kind of combination. It is a seller failure, right, into a bullish pullback. Now, what if we don't get the shallow pullback? What if it really tumbles, right? Now, think about this here. This is basically a range back here, right? We go up, we go down, we go up, we go down, we go up, we go down, right? You got double tops, double bottoms. That's a range. Now, for all my volume profiling guys and gals out there, what does a range tell me? A range is a magnet, right? A range is a magnet. So if this thing really tumbles back into this area now, is it bearish yet? I don't think it is yet, but it will be if they can hold that pullback. What's the best way to buy a real strong pullback like that? Is it a straight up seller failure? No, because if you try to buy into those stops at that point, a lot of times they're going to come in and make you pay for it right behind it. Okay, so if it really pulls back strong, what you want to do is you want to break out the big guns here and use the nested, right? Let those bears try once, let them try twice. Then you know you've got all the bears roped in, right? Now all the bears, they're all piled on the boat. Now tip the boat over, right? And simply buy right into those stops. Now again, if they hold this thing, then good for them, right? If they hold this, this becomes a 1, 2, 3 reversal. We mark the low, we mark the high, right? And we sell off the high. Or, right, it runs lower into a 2-try trap. So we can sell right with a trap pattern. So if it does turn bearish, I'm fine by that. All right, that's not going to ruin my afternoon. But I'm not going to just guess. Right, it's too bullish right now to try to sell that pullback. What I'll do is I'll wait for them to try once, try twice. I know where stops are, and we're buying into those stops. Now, usually, not always, but usually, when you get a deep pullback and a nested failure pattern like this, the reversal going higher is really strong. And although I would love to get that beautiful pullback pattern off the moving average for that pullback combination, just don't hold your breath for it. A lot of times what happens is you get a shallow pullback, a higher high, and you know what we're looking for. There's that 2-try trap pattern again, right? That trap setup that we talk about so often, right, on this newsletter. Does that make sense? And usually there'll be some sort of like hidden channel here, right? Kind of on a, as you zoom in on that chart. Those are some great setups we're watching for here tomorrow. So on a pullback here, again, if we get that sharp pullback, if they hold that moving average and this thing just dumps, right? If it rolls over and runs now, now we're drawing off the low, we're drawing off the high. Now we are looking to be a seller, but I'm just simply not going to try and sell that first pullback, right? Or if it just collapses down, right? If it free falls on us, we wait for a shallow pullback, right? A lower low, a trap, right? And we go from there, right? You can see an example right here, right? We go up, shallow pullback, higher high, trap low, and go. Go down, shallow pullback, lower low, trap high, and go. It's the lower low that gives it away. It's the higher high that gives it away. All right, and don't forget, tomorrow morning, 8 o'clock Eastern time, we'll do it all together. Now, of course, if we go sideways up here, I'll be curious if we do, right? It's non-farm Friday tomorrow, so normally gold will be pretty nasty. If we go sideways here overnight, just simply wait for the pullback, wait for those bears to try and fail, and simply buy into those stop losses, right? If it goes higher here, right? If we don't go sideways, if this thing goes higher here right now, this now becomes a spike in channel, right? If it goes higher, it becomes a spike in channel. What do we do with a spike in channel? We look for traps. We look to get below prior swings, right? Get that pull back, right? What I always look for is a combination of a trap into a seller failure right below the low of that channel. Does that make sense? Right? It's in all reality, it's a 2-try trap. And I know this is getting more advanced here, but you can handle it, right? You tune in every evening with me. You're with me all the time, right? So it's a trap low, a seller failure. maybe even a pullback pattern as we go higher from there. As you can see, we're going to use these pretty consistently, right, over and over again. Now, don't forget, if this market races higher here, which it easily could, your best option now is that two-try trap, because you're not going to want to make it a habit of buying too aggressively, right, this high up in the chart, right? So two-try trap being an easy one as we go higher. Hopefully that makes sense, right? Makes sense? All right, so now we know where the market's trying to go. Again, if we just keep grinding higher here, right, keep on watching that channel, right, watch those traps, trap, seller failure, back up to retest the high. Don't fight, right, don't fight the trend right now on the gold, right? We know how to buy it. We know how to sell it. We know exactly what to avoid as far as traps go for tomorrow. And again, speaking of tomorrow, we're going to do this all together like we do every morning, 8 o'clock Eastern time. What are you waiting for, right? Come out and join me. I'll put all the membership information, including all the different payment options, right? I'll put all the information for you, the link below the video tonight on the blog, down in the description of the YouTube video. And again, if membership isn't quite right for you, make sure you grab that link in the description for our free trading course. That's included with our free trial. Our free trial includes a free pass to trade room, hundreds of examples of how we apply our strategy to our favorite markets, and of course, right, that free trading course where you can learn all about the patterns we're talking about in this video tonight. Don't be afraid to call me in the office. I'll be here tomorrow and all weekend. This always kind of rings my cell phone when I leave the office, right? No escaping you guys here at School of Trade. I'm kidding with you. I love to talk to you guys on the phone. So call us in the office. Use that live support tool, right? Don't be afraid to drop those questions in the comment section below, and hit that thumbs up button for me. If you're still watching here tonight, right, hit that thumbs up button for me. Always means the world to me. You guys carve out an hour and a half with me every evening on this video newsletter. Thank you so much for tuning in this week. Tomorrow, last day of the week for us. Hopefully I'll see you tomorrow bright and early. If not, we'll see you guys next week for the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other this weekend, will ya? And be here next time. Adios, amigos. Bye-bye for now.